Hey, how's it going, guys? Albert, also known as Trading AD, also known as the Counter Trader. In this video, I'm going to be talking about my new approach on trading. Generally speaking, in the past, you would see me do multiple trades um, at a lower risk. Now I'm more in tune and in depth towards something heavier. Even with a small account, the only way I'm able to do that is to be able to assess the chart and make sure that it's in a unicorn or something that's very good or great. So remember, I have a three-tier system: great, good, and okay. So when it's great, I'm going to be putting in a large amount because that way even though it seems like I'm doing a high risk, high reward system, to me, that high risk is worthwhile because it's beyond 90% success. As long as I don't flop on my end, I know the stock's going to go. So let me just show you what I would trade would look something like this. So more or less, you see me trade the ramp, and this is I am more short biased nowadays because it is true that stocks that go up go down faster, so it's quicker. And lately, I've noticed that a lot of stocks that go down really need to be very exaggerated. Otherwise, it's going to play games with you down there before it goes up, if it does. So here's me talking about me being short bias, talking about a possible short. So this is a move on up, and then generally it moves down like this. So this is more or less what you've been seeing me do most of the time. But some lately, you may have noticed that I've been trading crap, something more like. Let me finish this one. All right. Ugh, I'm really bad at this. Stupid paint. Okay. Oh, come on. Okay. Oh shit. What a waste of time. Okay. Something like that. Or lately, may have noticed that I've been trading something kind of like, not like that. There we go. Something like this. Like that. So this one would be like a rumor catalyze, meaning it pops up a lot and then it comes down eventually. Now that's the one that I want to talk about because it's generally a rainbow shape and we're looking for maybe 25% is nice, but a 50% move, a Fibonacci retracement would be even better. But we're not looking for home runs. We just want to get our profits and just get out when we can, or when you see somewhere that it could have problems with on a support or something. But regardless, remember, every time we do a trade like this on a counter trend, it needs to have something that human behavior would all agree that is a good place to stop on the top. So if it's a whole dollar or a multiple of 10 or somewhere on the daily chart that shows multiple resistance. So if it's $10 up here, then most likely it's going to have trouble up there, and hopefully it gets rejected, in which it will go back down. Same with this one. If it's $10, or if there's it has a place that continually stops at, say, 1140. If you see four areas on the daily chart that it keeps tapping 140, then quite possibly, if it exhausts itself all the way up there and it has a lot of volume, then it's probably going to be done. Now with both of these, because I'm looking for violent movement, I rarely even look at the 2 minute or 5 minute. Unless it decides to play games after my entry, then I may slow myself down and look at the 2 minute and 5 minute. But entries are always a 1 minute trigger, meaning that it needs to pass up the previous 1 minute candle in order for me to execute. So if the candle is really big on the very point of exhaustion, and you basically have to pass up that previous candle, say it's a $1 stop, just because that candle's $1 worth, then you have to ask yourself, is it worth doing? Now, most of the time, you can always assess your risk by just reducing your shares, and I do that all the time. But then it doesn't turn out to be great anymore. So the main issue is, in the chat room, I may say this one looks great, but it's only a unicorn or something very good or excellent when you verify what it does at the very top. basically. So let me just show you a couple of days that had this. Today was one of them. So I have a couple examples. So let me show you real fast. Okay, so here is Spotify. This is June 18th, and you can see that it's ramping up. It looks really good. A lot of green candles here. It touched the 220 area and it's coming back down. And I'm adding an extra 100 shares on top of 500 because it's looking so good. You see that volume spike. So I enter here, and hopefully it just goes the way it's supposed to go. Now I can't remember honestly because it's been quite a while, but about a week actually. So let's just see if this goes smoothly. Yeah, because something moved up that much and you see that conviction on that volume, you can almost be certain it's going to go pretty well. And this one didn't have much slippage at all for typical for TradeNet. So yeah, happy for that one. So here's the other one. I didn't quite catch the entry, but you could tell by this one that it's that rainbow. This one had some major news from 164, and it shot up. In one candle, it shot up to 172-ish, and then it kept going. Now, the reason I don't enter is because I just stick with my rules. I need a 1-minute trigger. So it looks like there was a 1-minute trigger right here, but it just didn't look good. So most likely there was some kind of there was most likely an area in on the daily chart. So let me double check that real fast. Okay, so this is 618, and it went up to here, which is basically the close of this candle right here. So that's a trend line basically. All right, so it went up to 180 and went a little bit past 180, and basically I entered at this 1-minute trigger. At 200 shares because, well, just because this thing has a lot of range. And if you look at the spread, it's ridiculous. The spread on this thing is crazy. So a lot of times there are two outcomes with these kind of charts. Either it goes straight up and then it curls down 25%-ish, or it goes straight up and then it just fades away. Now, of course, you already know I don't like those kind of fades. I just can't hold my breath that long. So I just want it to go up and just go down, quit playing games. Now, the problem with these are, generally speaking, you really want to set your stop at the very high a day. And now, any pro trader that if you ever meet one, or if you go look on YouTube where they ask about where do amateurs always fail at, and it's generally because we set our stops too close. Now, according to this, I had my stop at 180, so that's not the very high. That's not good. But I just want to try to minimize my risk, and that's just how it goes. High risk equals high reward, and if you get stopped out, you better be prepared to get back in if you have to. So that's one of the reasons why I like things that go very exaggerated, because it limits the amount of limits the mentality of, are we finished yet? I mean, if you can look at it and say, where else is it going to go? How far? I mean, it literally looks like it's impossible to go any further. Then you're probably in the right mindset to enter. But the longer it takes, the more it gets blown around by the wind, and that's just tough. The one thing I do like about this is the volume. Notice how the volume is going down, is diminishing down here. Any volume spike will show resistance. Now you see that it has a little bit of extra volume on the green because it's retesting its position. This happens every now and then. You just have to keep your cool. I'll tell you honestly, most likely at this point, I'm sweating because this does not look good. And I did get stopped out. There it is, because I had my stop at 180 like an amateur. So from there, I have to reassess. Does it still look good? So my entry would have to be impromptu, meaning I can't take a risk for a 1-minute trigger. There it is. I took it. Now, if it goes down, then that adds to the conviction because it couldn't break that 180 mark. So let's just see if it goes over 180. If it goes under, most likely I'll add. Yeah, already have my cursor on the short button to add if it goes down. But then this time I didn't get it wrong. I set my stop at 180.60. I like to bunch up the candles just to make sure I know what I'm looking at. But the reason, when it gets to this point, maybe I'll look at the 2-minute and 5-minute chart, but it still looks good. I mean, the amount it moved up, it really needs to come back down just to reset if it ever wants to come back up. And I still didn't short it because I need to get a little bit past that support area right here that it created. Okay, now it's looking pretty good. There it is. I shorted it again. Smart move, Albert. Now from here, it's very possible. Now, okay, yeah, I set my stop for the 200 shares at 181.20. Honestly, I would be fine with anything over 180 as a stop. But there it goes. Now it's finally going. It broke through. This is pretty much smooth sailing. Don't get too greedy because it really did keep testing that area. So I really don't know if it wants to come back up. It looks really good. Breaking through that area, and I just took it. So here's another example. This is actually today. Arthur requested me to do this one. Now with this one, you see that the very first candle obviously catalyzed a lot from 56 to 59, and it went a little bit past 59. The point is that the very first candle hit 59, and then it came back down, and it tried hitting 59 again. I'm going to try to enter this one on a 1-minute trigger because it looks like it's getting rejected in that 59, low 59 area. And I'm doing 300 shares because if you look at the spreads, it's kind of scary. Honestly, I should have probably gone a little deep, little heavier. But you know, that's hindsight. You know, you really can't tell if it's going to go any further. You could tell that it's still thinking about it. So it tapped 59 again, and there is no wall there. But the whole point is, can you really hold that move all the way up there? Because most of the time, after it keeps tapping an area, it needs to come down before it goes back up, to even think about it. So that's the whole theory of taking something like this. And this one's going to be fast. So hopefully you have a platform that's fast. And CFDs are fast because with this TradeNet thing, it's, you're not taking or adding any liquidity. It's just, it's just a mirror. And the 5750 area looks good because you see how the candles kind of cross over in the area. And also, the blue line is down. Yeah, I got it out. So basically, I think, yeah, I got out at a very good place because it actually goes up a little bit from there. And that's about it. That's just how you take it. And then here's another typical ramp. This one did not go very smoothly at all, because it was just a pain in the butt, honestly. So it failed the first time. So let me just get to the end, right here. So it fails the first time, and I realized $587 because it looked really good at this area right here. But then, of course, it wasn't done, and it ramps up again. But it's getting to that place. It goes up to here. This area. It touches here. It touches all of these candles right here. So, disregard the high of day because that was at the end. But 1040 was where it's at, and you could tell that it's at a really good place according to this chart right here. So I'm shorting it, and it finally broke down after the 1 minute trigger. I'm watching the SPY because this thing's already getting blown around. So it's not looking favorable. As you can tell from the daily, it actually goes up after this. So it wasn't done, but just noticing how the volume was right here ramping up, you know that it needs to reset. It needs to do a full reset before it goes back up. So this is where I meant in the beginning of my how to become a trader that trading is an art, because a lot of times imperfection makes perfection, right? You don't always paint the most perfect picture. That wouldn't be human behavior. We always second guess things. So sometimes we want it one way at this time, but later on, by the end of the day, we may want to finish up our brushstrokes. And that's what happened with this one. And finally, this thing goes down. And of course, $10 is probably a good place. But yeah, I'm taking it right there. That was just too much of a headache for me. So today is like a little over 800, and yeah, that's about it. But those are the two examples that I would so far that I can find that I haven't showed you previously, like Hertz. Hertz was more like a U shape, but that was more that one was rough. I can tell from the comments that a lot of people noticed that was rough. That $1,000 and 10-minute video. So yeah, all in all, the approach is still the same. We're still countering, and it got to a point that that's all I look at now because, well, my 90 percentile is getting higher. My ability to get things done right is getting better based on the fact that I'm very picky now. I'm so picky. It's almost like you're in a relationship. I think I like, when it comes to something that you're passionate about, not that I'm really passionate about trading, but I understand it as human nature, it's very much like dating. Kind of thinking about it, if you think about it, when you first start off in dating, in the dating scene, you really don't know what you want. So you look around and you if you're aggressive enough, then you're going to take risks, right? And a lot of times you'll get your heart broken, or you lose in the stock market. It's like you losing money. But eventually you get the right idea of what you're looking for. So then you get the right strategy or the right type of girlfriend or boyfriend. So you know what you're looking for. You want a brunette, you want someone smart, and you want someone who's in tune with you. So that's when you start figuring out exactly the type of strategy you want in trading. But of course, you really need to fine tune it. And sometimes it gets to a point where you can never find the right person because you know what you want. After years of trading or after years of dating, you know what you want. You got burned way too many times, right? So it's like having a 5-year relationship and breaking up. It's the same thing as blowing up your account, metaphorically. So you start over and you know exactly what you want. So sometimes you're really hesitant to go all in the relationship. So or in the trading world, you're trading smaller now because you don't trust what you know. It really ties in together. But if you really know what you want, then you know exactly how to find the right person, and that's when everything meshes, and that's when you go all in and you don't trade all in. You never do that statistically, but you know what I'm getting at. You use a higher risk because you know the reward is greater, and that's when you get married and you have kids. So you get the idea. The idea is that you have to trust in what you know. And when it comes to counter trend, I ended up being the counter trader. That's all I do now, and I'm profitable. I like what I'm doing, and I don't have to try for anything anymore. It kind of just comes naturally, and it will come to you the same way as you keep doing the same thing over and over again, right? That's perfection after years and years of practice. So just, in other words, don't be a simp. Don't be somebody who's like slutting around, trying to hit on anything you see because the chat room says something. Take something that you know that works and go for that. If you like a rough road in a relationship, go for it. If you like that kind of strategy, go for it. But for me, you know, I like a girl that knows what she wants, and I know what I want. So I'm going to get the one that looks perfect for me, and I'm going to get in the trading world. I'm going to get in and out, and I'm done with that, and then on to the next one. But day by day, it's usually no more than three or four trades, and I'm happy. And I more or less hit my mark. So I mean, the range is greater now. Sometimes I don't trade anything, and sometimes I make a $2,000 day in one trade. It's very diverse. But in the end, it doesn't matter. In the end, it's about being profitable and limiting your risks. And for me, limiting risk means finding the right trade, not limiting the amount of shares because you're afraid of the movement or the relationship you're in with the stock or the girl or boy. So I think that kind of makes sense. But let me know what you think, guys. And if you like this content, please don't forget to like and subscribe. Um, I don't have any training courses. I don't sell anything. This is just something I like doing. I'm an educator first, and day trading happens to pay the bills. So take care, guys, and I'll see you next time. Bye.